Hello and welcome to another edition of 9 to 5 Live. My name is Mark Williams and joining me is Francois Savary. Francois, hello.
Hello, Mark.
Thank you for joining us again. It's good to see you. Let's talk about China. A week ago, the People's Bank of China announced a draft of measures designed to stimulate the economy. In that time, the stock market has gone up by 15%, but the Chinese currency has gone down by 12%. So can we start going through the measures that were announced? What are they? Can we then talk about the headwinds facing the Chinese economy? What more can China do to put its economy back on a decent footing? And then what would be the effect of those measures on Western economies? For instance, an increased exports or a lower currency. And lastly, we need to talk about, is China investable now? Is this the right time to go back into stocks? And if not, what kind of signal are you waiting for in order to start reinvesting in Chinese stocks? Francois, let's talk about the measures that were announced last week. Can you describe them to us? Tell them what they are.
Okay, let's remain general, but in a way they have added measures on the monetary front, lowering interest rates, different interest rates. They have set up some elements of support, monetary support to the banking system. They have issued some new measures concerning the poor people on the fiscal front. They are helping the very poor people, taking into account the fact that there is some social risk in China right now. They have helped the real estate sectors by reducing the mortgage in the first step of some of the reducing the interest rates on mortgage, on some mortgage. Then this morning they announced that they are going to lower the mortgage rate by the end of October. So that's for the issue of the real estate. And they are pointing towards some renewed measure concerning fiscal policy, more stimulative fiscal policy to support consumption with the issuance of a lot of debts where 50% of the debt that they will issue will be allocated to support consumption in the medium term.
Right, let's talk about the headwinds in the Chinese economy. What do you think they still are even now?
The first one and the main one, and it remains, is the issue of the real estate. The real estate crisis is still alive in China, and the late number concerning the evolution of prices in the main cities tell you that the deflation of the asset bubble is still in place. So this is a significant element because, as you know, Chinese people have put a lot of their saving into real estate. So it's killing the confidence because when you see the prices of houses and apartments going down in the way they did over the last few years, it means that people lose confidence. They are unable, they want to save more, they don't want to consume. So this is a big thing. The second thing remains the aging population. It is something that is very important. And there is also, I would say, a third element that we need to keep in mind. The Chinese model is still a model that relies a lot on the ability to export. So it's foreign demand that is driving the growth for the last few quarters. In the meantime, the Chinese economy is facing a deflationary risk. Prices are moving lower and lower, and this is very dangerous because deflation is killing confidence. Confidence is killing consumption, and it means that it's killing your growth. So at the end of the day, and this is something that happened last week for the first time in many, many months, the Chinese authority have told us one thing: to get the 5% GDP growth in 2024, the target is going to be very difficult. They realize that the model is not producing the kind of growth they would like to see.
So let's talk about the obvious solution that the Chinese would choose in order to reboost their economy. That would be exports to the West, which would mean, I think, a further lowering of the Chinese currency. Is this? Do you think this is the way they're going to choose?
I don't think so. I think that what they showed us last week is that they have finally realized that what is essential is to really make a stimulus of domestic demand. They need to be able to recreate domestic demand through consumption. And that's the reason why they are talking about fiscal stimulus for the time being. And I think that, the last few quarters and the last few years in a way have shown that it's the fact that Chinese economy depends so much on exports to grow is make them more fragile and not stronger because they are subject to tariff and because they are subject to the trade war that is happening between the different economic blocs. So no, it's not there that they need to find the solution. They need to find the solution on the domestic front and especially on the consumption.
Is this, do you think, the start or the beginning of the much talked about BRICS currency?
I think you have to create a BRIC currency is a very medium to long term process. First, you need to have economies that are very convergent in order to be able to create a currency or a currency area. You need to have, in a way, a system in which the macro policy, trade, monetary, fiscal policy are defined together and are convergent. We are not there yet, and I don't think that it's either an acceleration or a deceleration of the process. I think in this regard, BRICS currency remains a medium to long-term objective.
You mentioned just now that you think the new strategy is to relaunch the economy by internal consumption. Surely that's excellent news for Western exporters. If take, for example, luxury goods. They would benefit hugely from an increase in spending, wouldn't they?
They will, and they had. Look at what happened on stocks like LVMH, Kering, or Louis Vuitton, or Hermes last week. It's absolutely stellar. There was one day, I think, that the three stocks were up 9% or more, and it continued on Friday. So clearly, yes, in a way, people are trying to say, how do I play the Chinese equity or the Chinese market? Maybe this is a good way. Maybe it's to invest in luxury goods because the luxury goods are a beneficiary if the process that is underway is coming to an end with real support for consumption, because those discretionary stocks are going to benefit from such a development.
Coming to the stock market now, you've been cautious on the stock market, China, for 6 months now. Do you think now is the right time, after the announcement of the stimulus measures, to get back into the Chinese stock market?
No, I think that, first of all, I think that my cautiousness towards China was warranted, and the fact that you had some intervention for the last 7 days tells you one thing. The fundamentals were not good to be invested in China before the measures that were announced. Yes, the measures were announced, but the market reaction has been quite significant in the course of the last few days. I mean, 15% rise in Chinese equities is significant. I think a lot is priced in, and we are still facing some uncertainties. As I said, some of the measures are real and they are effective. The monetary measures, they are real. The fiscal measures that are needed are still to be defined and implemented. So maybe there is too much of a frenzy about how everything is perfect again in China. So that's the first element. The second element, I think that a lot of the things that were announced now are priced in. Third, I think that the element which at the end of the day is the heart of the problem, which is the real estate bubble deflation, is still with us. And fourth, we need to have more proof that the deflationary pressures that have developed in the Chinese economy are receding before taking any or before changing our mind about the ability of Chinese stocks to continue to rise from now on.
Thank you very much, Francois. I think that's all we've got time for. Thank you very much, and speak to you next week.
Bye-bye.